Guys, I gotta say I'm super excited to make this video for you because I believe the information that you're about to learn in this video can completely change your life for the positive and allow you to finally become financially free. And by the way, all of this knowledge comes from my experience working in the financial industry, years and years of a lot of studying to be able to know what the wealthiest people in the world are doing, and also the opportunity that I've had over the years to be able to interact with some of these people and learn directly from them. Okay, so the real secret in order to build wealth and become financially free comes from owning financial assets. As you're probably thinking now, all the wealthy people that you know own assets. But now, as that comes into your head, the question naturally becomes, what kind of assets out there and what is the best asset for me to own? As I mentioned before, assets are the real key to achieving financial freedom. And there's many different reasons why, but in this video, I want to share with you only the most important information that's going to really make an impact to you. Here's the main reasons. Number one, we have appreciation. An asset, a really good asset, tends to go up in value. And that's something that is hard to achieve if you just have a salary. Sure, you can have a raise over time, but an asset tends to go higher than the value of a particular job salary. So that's a really powerful concept. The second one is that assets tend to generate income. And that income is not necessarily something that you have to trade your time for, but something that you get from owning that asset and establishing that asset in the first place. Number three, we have that assets protect against inflation. What happens with inflation is that generally there's more money printed around the world, and this follows the law of demand and supply. When there is more money and there's only a certain number of things that you can buy, what tends to happen is that a lot of that new money goes to buying assets. So that allows those assets to rise in value over time, and this is why this also ties with the appreciation aspect. And essentially what this does is that now there's more money, the assets go up in value, so this offers you protection against inflation versus when you just kind of working, getting a salary and trading your time for money, there's no real protection against inflation. Next thing you know, things can go up in value a lot, like in terms of your bills, your expenses and whatnot, but your salary can stay steady for a long time. Therefore, this is why it's very important to have assets. Then number four, this is a really key one that if you are able to understand this, will put you ahead of 99% of people. And this is the concept of leverage. There's two types of leverage. There's people leverage and there's money leverage. Let me first explain the people leverage because this is something that is not talked about enough. People leverage means that instead of you having to do all the work, you can hire people to do a lot of the work for you and you still get the benefits of all the work that those people did for you. So if you have a business, or for example, you own real estate, rather than you having to deal with the tenants, rather than you having to deal with the property renovations and whatnot, you can hire people to do the job for you, get the economic benefit, meaning like if you sell the property once you make that money, you get to keep that money because you're the owner of the asset, and all you have to do is just pay the people what they're supposed to get paid. And so that is a great benefit because it means that you can essentially make money without having to do that much work yourself. Now, the other side of the leverage coin is the money leverage. And let me explain to you in more detail this concept on a spreadsheet. So here we have two situations using leverage. And leverage basically means using other people's money, or also known as borrowing money from other people. So we have two situations here. In both cases, we're investing some money and then that money we're going to get a return on that money, and we're trying to measure the return on our investment as a percentage, so that way we could compare both scenarios. Scenario one, we don't borrow any money and we invest $100. So that is essentially the cost of the investment. Let's say that after that we get a return of $150, and this could be in any particular asset, and we didn't borrow any money. So therefore we didn't incur any money in interest or anything like that. So so therefore the cost in this case is 0. So the return that you get on your money is very simple to calculate. You essentially take the return that you got, subtract all the different costs that you had, so in this case the cost that we had was the initial investment, and then divide all of that by the amount that you've invested, so in this case is $100. This tells us that in this case we had a return on our money of 50%. Now let's see how that compares to using leverage or borrowing money. In this case, we're going to invest $50 of our own money. The investment is still going to be $100. Guess what? We're going to borrow that $50 that we need from somebody else. So the return of the investment remains the same, $150. But in this case, we also had to pay some interest, and that interest is just going to be $20. So therefore, the return on our money is simple to calculate. We take again what we got, subtract all the cost, which is what we've invested, minus the cost that we had to borrow the money, and then this is going to allow you to calculate the return on your money, which in this case is 160%. So as you can see, this is way higher, and this is why rich people use debt in a smart way to be able to generate higher returns. And you can imagine if you keep doing this over time and this person keeps earning these higher returns, sooner than later they're going to be drastically more wealthy than you. The last benefit to having assets is tax benefits, and that's because when you have a job, when you have a salary, that tends to be when you pay the highest amount in taxes possible. So if you think about it, you get only so much money, but if a huge percentage of that money is taken away through taxes, then what is it worth to earn a high salary in the first place? For this reason, assets tend to be a lot more tax efficient and they have lower tax rates. So for example, when you have stocks, they're usually taxed less than your individual tax income. The same applies to real estate and many different assets that we're going to discuss next. Now that you know the real assets that have created real wealth for people over a long period of time, I want to share with you the most important things that you do need to know about each type of asset. The first asset class that I want to talk about is real estate, and that's because real estate is super powerful, and this is something that I witnessed myself working for many years as a financial analyst for one of the largest companies in Canada. So here's some of the main benefits for real estate. We have appreciation, and that is the fact that real estate, there's only so much land, there's only so much real estate that can be created in the world, and therefore when that's the case and there's more and more people, there's more and more demand for this real estate, this allows this real estate value to increase over time. Then we also have the benefit of financial leverage, and that is the fact that banks and many other institutions are more than willing to lend you money so that you can invest it into good real estate properties and make a return for them and also make a return for yourself. And we already talked about on the spreadsheet example why leverage is super powerful, because it allows you to generate higher returns. The other thing is tax benefits. So real estate has a lot of many different tax benefits that you can check out depending on the country that you live in. However, in generally, you do see that real estate is taxed way lower than, for example, if you just have a salary. The other thing is an inflation hedge, and that is the fact that as inflation goes up, so does real estate. So therefore, you're not really losing that much money to inflation, and that also ties in with the appreciation concept. Now, let's talk about some of the cons of real estate that you do need to consider. One of them is the high upfront cost. So because real estate is so valuable, it's also very expensive to get in. So therefore, if you want to buy, for example, a particular property or a set of properties, that is usually very expensive. So it's something to consider. The other thing is that it is illiquid. So for example, if you invest $1 million in a property and you need that money because some emergency came in, let's say you need something like medically or whatnot, it's not that simple to just be able to sell the property and get the money right away, so that way you could use that money for whatever you need. So something to consider as well. And then lack of diversification. So if you invest $1 million in a particular property, you're kind of only betting on that property only, and if something happens, which can happen at any time, which is outside of your control, the property and the value of your investment can decrease significantly. The other types of assets that has basically existed existed since the beginning of time is bonds slash lending. So this is when you lend money to a particular company or corporation or organization or whatnot. The benefit of this asset type is that it's very passive. You just give the money away. And then the other thing is that you may get regular cash flow payments or interest payments on a consistent basis. So that's really good because that allows you to use that cash flow to invest more or also to buy whatever things that you need. The other thing is that it's usually lower risk than other different asset classes. So it's very good if you're just looking for consistent income that gets to you no matter what's happening. Now, of course, lower risk something is, the lower the returns. So in terms of the cons, we have low returns, lack of control, and that basically means that once you lend the money, you don't have that much control over what is being done with the money. You kind of have to trust that organization, that corporation, that person to do the right thing so that way they can pay your money back. And then you're also subject to interest rate risk. So if the interest rate goes up or down, you may also lose some money because of that. So it's something you also have to keep in mind. Now let's talk about stocks, which is something that, as you know, and as you may have seen on our channel, it's really close to my heart. And that's because it's something that I do on a regular basis and I help people do. So let's talk about some of the benefits of stocks. So first we have capital appreciation, and that is the fact that over time stocks have proven to rise in value over time. And the reason why is because with the money that these companies are able to raise from the public markets, they're able to invest in many different things that allow them to grow their earnings and their revenues and have a higher impact of the world over time, and that increases the value of those companies. The other benefit obviously is that they're liquid, meaning that you can, if you have an emergency, you've invested $1 million in a particular company or set of companies or ETFs, you can take that money out and then be able to use that money, sell it right away, and use it for whatever you need. The other thing is that you have the potential to earn dividend income. So there's different companies that pay dividends to their investors. So this is a potential good source to get passive income. And then you also have the ability to diversify it in a relatively easy way. So you can invest in an ETF, you can invest in an index like the S&P 500, which takes a collection of the largest companies in the world pretty much. And so that if one company doesn't do well, the other companies do well, and that way you're still making a return. And then you also have the low upfront cost. So unlike real estate, where sometimes it's very expensive to get started investing right away, it's relatively simple to invest with stocks. I mean, you don't even need that much money to begin with. And even if you can see their price per share is like $1,000, many brokers have the ability for you to buy like partial shares, which means like a percentage of that share. So you can literally start with like $10, $20 and be able to invest in a company that's worth $2,000, just as an example. The cons, and here's the most important things to consider. First, you have volatility. So as you know, the market goes up and down for many different reasons. So it is something that you have to have the emotional intelligence and the gut to be able to withstand that volatility and see how your portfolio goes up and also down in value and not sell and make an irrational decision. The other thing is you have to be very aware of your emotional biases, and that means not listening to what others are telling you to do, but rather doing your own research and making your own decisions based on your own research that you perform. The last thing is obviously the lack of control. So when you invest in all these different corporations that are public, sure, you may have a vote, but because you own such a small percentage of the total shares, your vote is not going to really do much for the company. The last thing is businesses, and this basically means creating your own business, starting a business with a partner, or having some equity in the business that you work for. All of the three different options are really good things that I highly recommend that you consider, because this may be like easy hang fruit that you could just simply pick up and see your wealth rise over time. So what is it? What are the potential benefits and the cons? So first, we have the potential for higher returns. When you own a business or you have significant control of a business, you can do the things that you want to do, so that way the business grows as fast as possible and generates the highest returns possible. When you're just a passive investor, you don't have the control to decide what needs to be done in a particular company. But when you own that company or you have a partner but you have significant influence, you have that ability liability. The other thing is tax advantages. So corporations tend to be taxed less than individual people. So that means if the corporation makes a ridiculous amount of money and pays less taxes, that means that there's the potential for you to create a lot more financial value faster. The other thing that I mentioned is the control over the operation, which also ties in with the potential for the higher returns. And then the other thing, which is quite cool, and this is something that, you know, as an owner of White Sheets, I really emphasize, is the fact that with a good business, you can have more than just the wealth that comes with it, but also the legacy and the impact that you're having a good influence over a specific market, over a specific set of people and whatnot. So that's really, really powerful. Now, what are the issues with businesses? You have a lack of stability. So business can go up, business can go down, and you have to have the emotional stability to remain steady, do the right things regardless of what is happening in the market. The other thing is that your time and commitment to build a really solid business or be part of it or get offer shares of a particular company that you work for, you really have to invest a lot of time and be very committed to that company for you to be able to earn those shares and earn the growth that comes with that particular asset. And then the last thing is the stress and the responsibility that comes from that. When you own a business, there's nobody higher than you. So therefore, if something bad happens, you're the person responsible right away. And that, of course, can create a lot of stress and a big sense of responsibility over other people like employees and whatnot that work for the business. Now that you know the different types of assets out there that you can own, it is really important to look at yourself and analyze your strengths and weaknesses, as well as what it is that you want in life. This will allow you to pick the asset type that most align with those things and allow you to be able to study that asset type more in depth, and most importantly, create a plan that allows you to dominate that asset and do really well. Once you pick the right asset class or the right combination of asset classes for you, it is very important to understand that asset class in and out as much as you can. And that is because the more you understand it, the better you can do at performing well with that particular asset class. And there's many different resources, many different videos that you can check out on YouTube of the different asset classes. What I want to share with you is some really good books that you can check out for each asset class. So for real estate, we have this ones right here. This one I've read is really, really good. I've also read this one by Gary Keller. This one's I've been seeing how a lot of people recommend it and they have a lot of positive reviews. For business, these are amazing books that you can check out and will provide you with a lot of different tools and understanding that you need to be an effective businessman and to think about the different areas that are really important when it comes to business. For bonds/lending, here's some of the classics that you can check out, and the same applies for stocks. Me personally, I would really check out The Intelligent Investor. That's an amazing book, highly recommended, one of the best of all time, if not the best. But all these other books here are also extremely solid. And of course, you can also check out our YouTube channel where we have a lot of different content on the subject of investing in the stock market effectively. Now you know the real secret to generating actual wealth and becoming financially free. So go ahead and use this information so that you can start taking the steps that you need to be able to achieve that goal. Guys, information and knowledge have the real power to change somebody's life. So if you found this video helpful, please share with a friend that would benefit from having this information. And thank you so much for watching. I'll see you in the next one.